Hello everyone, how are you? I hope all of you are doing good. So welcome to day 4 of costing revision. Very good evening. So welcome you all. Quickly join in the session so that we can start at the earliest. So today we'll be doing overhead costing. Good evening, good evening. Please, all those who are live, please let me know if audio video is clear once. Please confirm about the audio and video. Okay, so we'll wait for 2-3 minutes so that everybody joins in. Then we will start with our discussion on overhead costing from where we left yesterday. So we'll continue from there. Good evening, good evening. Okay, just quickly confirm once if audio video is clear, and all those who are joining in live, please like the video as soon as you join. Okay, all clear? Thank you. Okay, any doubts if you have in the yesterday's session? The overheads part that we have done, we completed about the primary distribution, we completed about the secondary distribution. So today we'll be starting with the absorption of overheads. Then we will talk about under and over absorption of overheads and wind up the chapter. Then we will do some questions on machine hour rate. Just let me know if you have any doubts in the yesterday's session. No doubts, okay. Done. Okay, so we'll continue now. So yesterday we discussed about this overheads part, that why we are studying this overheads. Remember that there are 3 steps in the overheads. This is what we discussed yesterday, that there are 3 steps to identify the overheads in the 1 unit of the finished product. Why we want to identify? So that the cost can be recovered from our customer. Okay, the first step was primary distribution. The second step was secondary distribution. Now, after the secondary distribution, what has happened now? Just try to understand what is the next step. In the absorption, what we are trying to do, this is what we did. This is my factory area divided into 4 departments. Right, divided into 4 departments. P1, that is a production department, P2, S1 and S2. Right, now after secondary distribution, what is there? After secondary distribution, all the overheads are now accumulated in the production departments. This is where you have all the overheads now. There are no overheads here. There are no overheads here. So overheads are where? In the production department. Now we want to take these overheads to the finished goods. Now we want to take these overheads to the finished goods. This is what we call it as absorption or recovery of overheads. Absorption or recovery of overheads. Now, to make it identifiable with the finished goods, we need a certain base. So these are the bases. On these bases, there are different methods which are there. So absorption of overheads is what? The absorption of overhead means identifying the overheads with 1 unit of finished product so that the overheads can be recovered from customers, because the ultimate motive is what? The ultimate motive is recovery of overheads from the customers, right? So I'm requesting all those who are live, guys, please like the video, because almost 11 people are live, but there are only 3 likes. So if you can do that, that will be highly grateful for you. Highly grateful of you. Okay, let's come to the methods of absorption now. So there are various methods of the absorption of overheads. Now in the absorption, like rate per unit of output, we are saying budgeted overheads divided by budgeted number of units produced. Now how this absorption take place, try to understand. First, what I'm saying is in the last year, the previous year, my overhead cost, my overheads were 1 lakh. And I produced how many units? I produced 10,000 units. I produced 10,000 units and my overhead cost was 1 lakh rupees. So if I want to calculate my overheads per unit, that for manufacturing of every 1 unit, what is the overheads that I have incurred? So I can say 1 lakh divided by 10,000, that is rupees 10 per unit, right? This is last year what I did. I manufactured 10,000 units. On the manufacture of 10,000 units, the overhead cost incurred was 1 lakh rupees. So I can effectively say, if I take the number of units being manufactured as the base, so I can say that for every 1 unit, the overhead cost is 10 rupees. This 10 rupees, which we have calculated on the basis of what happened in the previous year, this is what we call it as absorption rate. This is what we call it as absorption rate. Now in the current year, what will happen? Now I'll come to the current year. Current year, you are saying the number of units being produced. The number of units being produced is 20,000 units you are producing, right? Now in the previous year experience, what you have calculated, that on the previous year experience, for every 1 unit that you are manufacturing, 10 rupees is my overhead cost. This absorption rate you will apply on these. So if you are manufacturing, in this you are manufacturing 20,000 units, so what will be your overhead cost? So you will say last year, assuming all the situations same, so last year if it was 10 rupees for every 1 unit manufactured, this year if you have manufactured 20,000 units, that means the overhead cost will be 2 lakh. Right? Now this 2 lakh is what? This 2 lakh is what we call it as absorbed overheads. We call it as absorbed overheads. Now this absorbed overheads represent what? This absorbed overhead represents the overhead cost actually being recovered from customers. This is what we call it as absorbed overheads. That is how much of the overheads we have taken in the finished goods, right? That is what we call it as absorbed overheads, right? Now this, here we have made an assumption that this 10 rupees of the overhead cost, which was in the previous year, 1 lakh is the cost, 10,000 units, 10 rupees for every 1 unit manufactured. Sir, but in actual, this overheads can be plus minus, this overheads can be more than what happened in the previous year. Every year the situations are changing, the prices can change and all. Yes. For that we have the next topic. Clear? So absorbed overheads, this is how we calculate it. So these are this here we have taken the base as overhead cost per unit. For every 1 unit that we have manufactured, what is the overhead cost that we have to incur, that we have to bear? So rate per unit of output says budgeted overheads divided by budgeted number of units produced. This will give you, all these are methods of what? Absorption of overhead means all these methods will give you what? All these methods will give you absorption rate. All these will give you absorption rate, that in the last year what happened, accordingly we have calculated one absorption rate. So budgeted overheads divided by budgeted, like last year budgeted overheads were 1 lakh, number of units produced is 10,000, so 10 rupees per unit is my overhead cost. Right? This is one method where on the basis of output we can do. The next method is on the basis of percentage of direct material cost. Right? If in the last year my material cost was 1 lakh and my overheads were 50,000, so I can say that my overhead is 50% of whatever is the material cost. Right? So budgeted overheads divided by budgeted direct material cost into 100. So what I am saying is, if last year my overheads were 50,000, whereas my direct material cost is 1 lakh, so I can effectively say that what is the absorption rate, how you are going to absorb, how you are going to recover the overheads. So in the next year, whatever will be the direct material cost, I'll take 50% as overheads. Simple. Right? After the direct material cost, we can also take the percentage of the direct labor cost. Now, direct material cost, direct labor cost, this is directly identifiable in the 1 unit. So material cost also we can take, labor cost also we can take. So labor cost is budgeted overheads divided by budgeted direct labor cost into 100. So here we are taking the word cost, that is rupee terms. Only then we can calculate the percentage. Then percentage of the direct prime cost. What is the prime cost? Prime cost is the sum total of, that is direct material cost plus direct labor cost. So budgeted overheads divided by budgeted prime cost into 100. This is another method. Next is direct labor hours. Earlier it was what? Earlier the word being used was cost, but now we are using the word direct labor hours. Direct labor hours means what? For every 1 hour which our labor is working, what is the overhead cost that we are incurring? Overhead for the labor means tea coffee expense, right? So these kind of expense we can take. So 1 lakh of overheads are incurred if my labor is working for 10,000 hours, right? That means for every 1 hour that the worker is working, for every 1 hour that my labor is working, I have to incur an overheads of rupees 10 per hour. Now please be very careful, it is not in percentage. Not in percentage. Sometimes the student applies the percentage in the labor hours also. How can you apply the percentage? Because there are overheads which are in the rupee terms, and this is in the labor hours term, not the rupee term. Percentage you can calculate if the numerator and denominator both are in rupee terms. So please be very careful with the small things. Clear? Okay, up till this point, if it is clear, please let me know. Please let me know if the first 1, 2, 3, 4, 5 methods are clear. Then I will move on to the 6th method, that is machine hour rate. Right, the next method is machine hour rate, which is very, very important, on which we have the individual topic itself, right, from where the questions, maximum number of questions are asked from overheads, the machine hour rate. Okay, rest of the people, if it is clear, please let me know. Okay, the next one that we have is machine hour rate. Now, what is a machine hour rate? Just like the labor hour rate, what we are saying is, in case of labor hour rate, we are saying that what is the overhead cost that we have to bear for every 1 hour that our labor is working. Similarly, if our machine is working, for every 1 hour the machine is working, we have to incur certain overheads like repairs and maintenance of the machinery, depreciation of the machinery, oil of the machinery, electricity being consumed by the machinery, salaries that we are paying for the machinery, isn't it? So there are overheads which are related to the running of machine. So here the machine hour rate says what? The machine hour rate is budgeted overheads divided by effective machine hours. Now, if you have noticed one thing here, earlier we were using budgeted overheads divided by budgeted material cost, labor cost, prime cost, or labor hours. But here the word used is what? Here the word used is effective machine hours. Right? Now, what is the meaning of this? Effective machine hours. What I'm saying is, we are using the word here, effective machine hours. Now, if you see, in the labor costing, we have calculated the effective labor hours. Effective machine hour means the number of hours for which the machine is actually involved in the production. Now, there is a machine in your factory. Do you think you can run the machine for 24 hours continuously? No. Just like the human beings, the machine will also require a certain kind of a rest, isn't it? So, machine hour rate is what? Machine hour rate is the effective cost of running the machine for 1 hour. Right? That for every 1 hour my machine is running, what is the cost that I have to bear? So effective machine hour means the total machine hours minus the maintenance time and the setup time. Right? Total machine hour it can run, but the machine will require the maintenance time as well as the setup time. So basically it is what? It is the normal idle time. Normal idle time. Remember, in the labor hours also we have calculated effective labor hours is equal to total labor hours minus the normal idle time. Similarly here for the machine also we can say this, that the machine needs the maintenance in between. The machine needs the break in between. The machine needs to be set up. For every batch, for every production we are doing, you need to set up, you need to prepare the machine for the production. That is my setup time. Right? Now, during which it is not involved in the production. So effective machine hours is number of machine hours for which machine is actually involved in production. Now, during the maintenance time, the machine will not be producing anything. During the setup time, the machine will not be producing anything. So that is why we calculate effective machine hours. Now, talking about the setup time, this is a very, very, very important note here that you have to be careful. They say the setup time may be unproductive or productive. Ideally, practically, if you think, practically the setup time is unproductive. If you are preparing the machine for the production, it will be unproductive. But if the question specifically says that setup time is productive, then we will consider it as productive. And if it is productive, then we will not subtract from here. Then it will be total machine hours minus maintenance time. Then the setup time will not be subtracted. Right? Now, if the question is silent, always take it as unproductive. If silent, no power is consumed during the setup time, even if productive. Now, logically and practically, if we think, this seems to be absolutely illogical, isn't it? We are saying that the machine is under the setup, there is no power being consumed by the machinery, but the setup time is productive. And you may find the questions like this, where the setup time is productive and it is clearly mentioned that no power is being consumed during the setup time. So we have to go according to what the question says. That is our limitation. We can say that we have to go according to what the question says. Clear? Now, talking about the machine hour rate. So what we have to do is, in case there is a question on the machine hour rate, in case there is a question on the machine hour rate in the exam, what you will do is, your first step will be, what will be your first step? The first step will always be the calculation of effective machine hours. Effective machine hours. Always it will be the first step to calculate the effective machine hours. That is total hours minus maintenance time minus if the setup time is also unproductive, minus setup time. This will always be your first step. Now, the second thing that you need for calculating this machine hour rate, what is the second thing that you need? That is your budgeted. The second thing that you need is your budgeted overheads. Now you will calculate the budgeted overheads. Second thing that you will take is budgeted overheads. For the budgeted overheads normally we divide it into two different parts. One will be the fixed overheads. One will be the fixed overheads and another one will be the variable overheads. Right? Fixed overhead means these overheads are not dependent upon the running of machinery. Variable, or also called as running overheads, these overheads are dependent upon the running of machinery. If the machinery will be there, the cost will be there. Fixed overheads can be like depreciation. If there is any rent of the machinery, that can be fixed. Insurance. So these are some of the fixed overheads which are there. If there is any salary, wages of the operator, wages of operator is there, which are of the fixed nature. Now, variable can be what? Which is dependent upon the running of machine, like repairs and maintenance cost. Like repairs and maintenance cost. Right? That is your variable or the running overhead. Consumption of oil, electricity or power cost, all these are what? All these are running cost. Clear? So now what we do is we prepare a statement of this kind where we take all the overheads, like rent is there, insurance is there, depreciation is there, repairs and maintenance is there, power cost is there, supervisor salary is there. Any other overhead which is related to the machinery, will take that. Then total budgeted overheads divided by effective machine hours. Right? That will give you what? That will give you the machine hour rate. That will give you the machine hour rate. That is the rate which tells us that for every 1 hour, if my machine is working, what is the overhead cost that I have to bear. Right? Few important points now try to understand and remember in this case. Sir, if in the exam you are confused that whether an overhead is a fixed overhead or a variable overhead, then my recommendation is do not bifurcate into fixed and variable. Just write down the overheads like this. That's it. Just write down the overheads like this. That's it. Do not bifurcate into fixed and variable. First tip. Second tip, or in some of the questions or some of the books you might find this. What we are saying is, whatever is the total overheads, whatever is my total overheads, whatever this total overheads, right? Rashid sir, hello. Sir, your class is done, sir. So Rashid sir is another cost accounting faculty. Right now he's taking the marathons in Coimbatore from 9 to 6. Okay. So what we are doing is, Rashid sir, because of you I forgot the topic. So in this case, if you are not clear about the fixed overhead and the variable overheads, do not distribute. Another thing is that in some questions you might find what we are doing is we are saying the budgeted overheads divided by effective machine hours. But in some questions you will find that this fixed overheads, how they are calculating the machine hour rate, they say the fixed overheads divided by total machine hours instead of effective machine hours. The reason being, the logic here being, they say the fixed overheads are not dependent that whether your machinery is working or not, right? The fixed overheads are not dependent upon the running of your machinery. Second thing, the variable overheads will always be on the effective divided by effective machine hours. Effective machine hours. This is how they are calculating the machine hour rate. So do not get confused if you look at from this perspective. If any of the question is solved by the ICI, but 99% of the questions will be where the total overheads will be calculated divided by effective machine hours. But you might find somewhere that fixed overheads are divided by total machine hours. The reason being, these fixed overheads are not dependent upon the running of machinery. That is why. Is the machine hour rate calculation clear? Another very important point that you have to remember. Another very important point. Now, these effective, I told you the first step will be what? Calculation of effective machine hours. Now, one very important thing, very common area of mistake that the students commit. If your effective machine hours, whether you are calculating it monthly or you are calculating it yearly, right? Whether you are calculating it monthly or whether you are calculating yearly. If you are calculating the effective machine hours monthly, all your budgeted overheads should be monthly, right? If you are calculating the effective machine hours yearly, all your budgeted overheads should be yearly. This you have to remember. The time frame, the time period, the time frame for effective machine hours and your overheads should be same. Rashid sir, why you need to watch this? The OG of costing, you are already there, right? So this is what you have to remember. This is a very, very common area of mistake, and what institute will do is, institute will give you some overheads monthly, some overheads the institute will give you annually. So you have to convert it very carefully, right? This is the area. So I'll mark it like this, that this is the area where you have to be careful. This is very important point of the machine hour rate. Okay, everyone, machine hour rate is clear? Please let me know if the machine hour rate is clear. So with this, we are done with the absorption of overheads. Yes, rest of the people, is it clear? Machine hour rate. Sure, sir. Rashid, sir. See you in Chennai. Next month. Okay, everybody clear with this? So now we are complete with all the three steps. So these were the three steps that we were talking about. Absorption also done. Oh, where is it gone? C part. This part. Primary distribution done. So we are done with primary distribution. We are done with secondary distribution, and now we are done with the absorption or recovery of overheads. Now moving on to the next topic. The next topic is under. The last topic in the overheads we have is under or over absorption of overheads. What is that under or over absorption? See here. Here we have taken this example. In this example itself, what we are saying is last year, on the basis of the budgeted data, what we calculated that for every 1 unit that you are manufacturing, rupees 10 is your overhead absorption rate. So what you did in the current year, if you are manufacturing 20,000 units, so what is the overheads that you are absorbing? Absorbing means you are actually taking to the finished goods, the overheads which you are actually recovering from the customer, 2 lakh. Right, but there should be a question in your mind that, sir, this 10 rupees was the absorption rate last year. The situations in the current year might be different. So this cost might be different. Absolutely correct. Now here what we are saying is, my absorbed overheads. What is my absorbed overheads? 2 lakh rupees. That is what we have calculated. What if the actual overheads which are incurred, are 2,10,000? Right? Now absorbed overheads are what? Absorbed overheads represent the amount that you are actually recovering from your customer. Actual overheads represent the amount that you should be recovering from your customer. Right? This is actually recovering. Right? This is what you are actually recovering. This amount represents what? That should be recovered. Now this difference, sir, what about this 10,000? If you are incurring an overheads of 2,10,000, you should be recovering 2,10,000 from the customer. But based on the previous data, you are recovering only 2 lakh rupees. So this 10,000 difference is what we call it as here under absorption of overheads. Under absorption of overheads. Sir, can there be a reverse case? Yes, there can be a reverse case. The reverse case will be that your absorbed overheads. The reverse case is that your absorbed overheads are 2 lakh as calculated above, but your actual overheads are 1,90,000. So what you are recovering from the customer, 2 lakh. What you should actually be recovering from your customer is 1,90,000, right? So this 10,000 that you are over recovering from your customer, this is called as over absorption of overheads. Right? This is called as over absorption. This is called as under absorption. So if your absorbed overheads are less than actual, under absorption. If your absorbed overheads are more than actuals, then it is an over absorption of overheads. Is the concept clear? What is under absorption and what is over absorption? So this is what is there. If your absorbed overheads are less than your actual overheads, then it is called as under absorption. And if your absorbed overheads are more than actual overheads, that is called as over absorption. Yes, everyone. Clear with the concept that what is under absorption and what is over absorption? Then we will move to the treatment of under and over absorption of overheads, that how to treat it in the cost accounting. We'll move to that part. Please quickly respond if it is clear. Yes, okay. So now we have to see that what will be the treatment of this under and over absorption, right? There are three reasons for it. So the treatment depends upon that why there is that under and over absorption. What is the reason behind the difference between the absorbed overheads and the actual overheads? You have to find out the reason. There are basically three reasons. The first reason is what? The mismanagement, or for any of the abnormal reasons, that there was a problem with the planning part. Right, they could not calculate the figures correctly. There was a problem with the planning. So if this is the case, there is a problem with the planning. So this is abnormal reason, always charged to costing P&L. Whatever is the under or over absorption, we will take that value to costing P&L. It will directly hit our profits. Clear? Next, the second reason, this is the first reason, this is the second reason, this is the third one. The second reason is, if you believe that the under absorption of one period can be set off against the over absorption of the next period, right? If you believe that under absorption of one period can be set off against the over absorption of the next period, then what will you do? Set off in the next period. That means carry forward to the next year, right? Then you will carry forward it to the next year. Clear? Third reason. Third, if it is due to genuine price rise or fall. If it is due to genuine reasons, then we will calculate supplementary rate. What does it mean? If it is due to the genuine reasons, what we will do, we say whatever is the under or over absorption, whatever it is, the under absorption or over absorption, we will take this to the three inventories. We will absorb this under or over absorption. We will take this value to the three inventories. What are the three inventories? One is your closing WIP. Right, so we can increase the cost of WIP. If it is an under absorption, we can take the value to WIP, we can adjust the cost of the WIP. Another one is closing finished goods, that is the finished goods which are lying in the godown. For that also cost we can adjust it, sir, no issues. Third will be the units sold. Sir, now here one thing we are thinking, sir, units sold, which you have already sold. Right, later you found out that there is for every one unit there is an under absorption of 10 rupees. Will you go to the customer and say, sir, customer, there was some problem, right? Our prices have increased. Please give me 10 rupees. Will you go again to the customer and ask for that? No, sir. You will not go to the customer. And for WIP, you can adjust the cost of WIP. No issues. For FG, which is not yet sold, closing stock of FG, you can adjust the prices. No issue. But for the units which you are sold, you can't go to the customer and ask 10 rupees from the customer for under absorption. Or if it is an over absorption, you will go to the customer and tell him, okay, take 10 rupees. We have charged extra. Will you do that? No. In that case, what you will do? You will adjust your cost of sales. You will adjust your cost of sales. Right? So three parts will be impacted. For that, what we do? We calculate one supplementary rate. Supplementary rate is what? The average rate per unit. These are the number of units that we will be having. So what we are saying is supplementary rate is nothing but the average rate based on which we can take it to the three inventories. Okay, so supplementary rate shows what? The supplementary rate shows over or under absorption of overheads divided by closing stock of WIP plus closing stock of finished goods plus sale units. This all is in what? This all is in units. Clear? After that, we have to pass a journal entry here. After that, we have to pass a journal entry here. What is that journal entry that we have to pass? In case of under absorbed overheads, it will be cost of sales account debit. We have to increase the cost now. Under absorption was there. That is units sold into supplementary rate. Then WIP control account debit, WIP units into supplementary rate. Finished goods control account debit, that is finished goods into supplementary rate to factory overheads. In case of what? This is in case of under absorption. Right? This is in case of under absorption. Cost of sales, that is what I told you. In case of units sold, you have to impact your cost of sales. In case of over absorption, what will be there? This entry will be reversed. Factory overheads control account debit to cost of sales, that is units sold into supplementary rate. WIP control, that is WIP units into supplementary rate, to FG control account, that is FG units into supplementary rate. Right? And normally the institute is asking for the journal entries on this. Clear with this? Now you have to be careful with 2-3 points here. Now I'll tell you the points which you have to be careful. One thing, how the institute will can give you the information. The information can be units produced, right? FG units produced, that is 10,000 units. Units sold is 8,000 units. WIP is 5,000 units. Right? So when we have to take the units here, in the WIP what we will take? We'll take 5,000, no issues. Sold 8,000 given, no issues. What about FG? In the FG, are we going to take 10,000? Are we going to take 10,000 in the finished goods? No. What we are talking about, closing FG. Closing FG will be what? If you produced 10,000 units, but you sold 8,000 units, so your closing stock of FG will be 10,000 minus 8,000, that is 2,000 units. Right? 10,000 minus 8,000, that is 2,000 units. So in the FG you will take 2,000. Be very careful if this kind of information, correct, 2,000 you will take here. Right? Another thing. Now, another information. They say the closing WIP is 5,000 units. Another information, the additional information that is given is, they say 50% is 50% complete in all respects, or 50%, okay, I'll write 50% complete in all respects, or the degree of completion, or it might be given as degree of completion is equal to 50%. Now what does it mean? The degree of completion is 50%. 50% complete in all respects, or they can write that degree of completion is 50%. What does it mean? It doesn't mean that 50% of this is converted to FG. Then it would not have been in WIP. It means that whatever is the total cost to be incurred on those units, 50% of that cost has been incurred. The remaining 50% cost is yet to be incurred. Right? Now, the under or over absorption can be calculated only on the basis of the cost which is incurred. So what we calculate here we calculate then equivalent units of WIP. Equivalent units of WIP. Right? So equivalent unit means if 50% cost is incurred, that means the cost equivalent to 2,500 units has been incurred in WIP. So in the WIP you will take 2,500 units in this case. Right? Not the 5,000 units. If the degree of completion is given, you will take 25%, 2,500 units, that is according to degree of completion. So these are the 2 points that you have to be careful about. One, this one. If the units produced and sold is given, so take the units of the finished goods very, very carefully. Second thing is this part, if the degree of completion is given to you. If the degree of completion is given, take the units of WIP very carefully. Okay, is this clear? So with this, we are done with the overheads. There is one more topic, I'll come, a very small thing, very small topic, but all the major topics we are done with. Yes. please go through all the concepts once. Take 2-3 minutes, go through all the concepts and see if you have any doubts. Then we will move to the practical part of this chapter. Please go through it once and see if you have any doubts in any of the questions anywhere. So let me know. Take 2-3 minutes, go through it thoroughly, then we will start with it. Now in the questions part, I will not be taking the questions on primary and secondary distribution. That you people can handle. I know won't be any issue. If there is any issue in any specific question, then let me know. Otherwise, I'll directly jump to the questions of machine hour rate, because that is what I want to do with you, right? Machine hour rate is a little bit of a technical part. And that is more important part. That's what I would say. Machine hour rate is more important than the other parts. So I'll take machine hour rate and 1-2 questions on. See, if nothing is mentioned, you will always divide it by effective machine hours only. Why I have told you total machine hours? So that in case in any book or anywhere in any of the PVQs, MTPs, somewhere if you find divided by the total machine hours, so you don't get confused. Otherwise, if nothing is mentioned, always to be divided by effective machine hours. Clear? Any other doubt? Yes, anyone having any other doubts? Or let's proceed with the questions part. Let me know quickly. No doubt. Okay, so let's proceed to the questions part. Come to illustration number 6. Come to illustration number 6. Okay, one thing I would like to say that guys, if you want to do the case studies I have already uploaded on YouTube. All the chapters case studies are there, chapter wise. I will share the link of the playlist if you want. I'll put it in the pinned comments, right? But case studies I have already uploaded for costing and for FM. You can watch those videos, the module case studies. That's why I'm not taking the case studies here, right? I have already uploaded all the case studies, right? Okay, let's do this illustration number 6. A machine costing rupees 1 crore is expected to run for 10 years. At the end of this period, its scrap value is likely to be rupees 9 lakhs. Repairs during the whole life of the machine are expected to be 18 lakhs. Okay, this is the scrap value given, costing given, then repairs during the whole life of the machine is given to you, that it will be 18 lakhs. And the machine is expected to run for 4380 hours per year on the average, right? So on an average in 1 year, the machine is expected to run for 4380 hours. Its electricity consumption is 15 units per hour. The rate per unit being 5 rupees. So from here we can calculate the electricity cost per hour, right? That in 1 hour it is consuming 15 units. So per hour it will be 15 into 5. The machine occupies 1/4 of the area of the department and has 2 light points out of a total of 10 for lighting. Okay. The foreman has to devote 1/6 of his time to the machine, to this particular machine which we are talking about. The monthly rent of the department is rupees 30,000. See here, this is the monthly rent that they are talking about. Then, and the lighting charges amount to rupees 8,000 per month. Again, this is a monthly cost which is given to you. 8,000 is a monthly cost which is given to you. Then the foreman is paid a monthly salary of 19,200. Again, it's a monthly salary which is given. Find out the machine hour rate, assuming the insurance at the rate of 1% per annum, and expenses on the oil etc. are rupees 900 per month. Now, if you see, the insurance cost is per annum, whereas the oil cost is again per month. That is what I told you, that some cost will be monthly, some cost will be annually. You have to decide whether you want to solve the question monthly or whether you want to solve it annually. I think they have done it monthly now. What is the first step I told you? The first step always is to calculate the effective machine hours. What is the effective machine hours here? It says this machine is expected to run for 4380 hours per year on an average. Is there any maintenance cost or is there any setup time given in the question? No. That means whatever the hours are given to us, these hours are the effective hours, right? So total number of hours per annum is 4380, and they have then calculated per month, that is 365. That means they are solving it in month, right? These are your effective hours only. These are your effective hours. Okay, so now if they are going to solve, they are calculating the effective hours per month. That means all your cost should be monthly now. All your cost should be monthly now, right? Let's see the fixed cost or the standing charges that they have taken. Depreciation. Now, how will you charge a depreciation? 1 crore is the value, scrap value is 9 lakh divided by 10 years. So it will be 1 crore of the value minus 9 lakhs of the scrap value. That means this will come to 91 lakhs divided by 10. This whole divided by 365, sorry, not 365. This whole divided by this whole divided by 12. To calculate it monthly, this what you will get is, this you will get annually. If you are dividing it by 10, you will get it annually. Divided by 12, you will get it monthly. Right? So this is what you are getting, 75,833. Clear? This is what you are getting, 75,833 rupees. This is your depreciation. Clear? If you want working, okay, working note they have given here. See. Clear with this? So this is your depreciation. Done, sir. Rent is given to you. Okay, fixed cost. Rent is also a fixed cost. Yes, sir. The monthly rent of 30,000 is given. The monthly rent of 30,000 is given. Monthly rent of 30,000. But see the wording here. They are giving the monthly rent of the department. Of the department is 30,000. Do you want the monthly rent of the whole department? No, sir. In the department, there will be other machines also. So how much of this rent should be apportioned to this particular machine? That is dependent upon this part, that the machine occupies 1/4 of the area of department. So if 30,000 is the rent for the whole department, how much of the cost is allocated to this machine? That is 1/4 of it. So this is what they have done. Rent is 1/4 of 30,000. Clear? Lighting charges. What is the lighting charges given? Amount to 8,000 per month. Now, is this the whole of this 8,000 is for this particular machine? No. The lighting charges depends upon what? The lighting charges are dependent upon the light points. So what is given? That there are total 10 light points. Out of that, for this machine, it is 2. So this 8,000 is for 10 light points. So for 2, how will you calculate? That is 8,000 divided by 10 into 2. This is what is done here for the lighting charges, right? 8,000 into 2 divided by 10. This will give you the lighting charges. Next, foreman salary. Now the foreman is paid a monthly salary of 19,200. Is the foreman being paid salary only for this machine? No, sir. The foreman is looking after all the machines. So for this machine, it is given that the foreman is devoting 1/6 of its time. Right? The foreman is devoting how much time for this machine? 1/6 of his time he is devoting for this particular machine. So out of the total salary, 1/6 we will take it for this particular machine. So foreman salary will be 1/6 of 19,200. Then sundry expenses, oil, etc. 900 directly given for the machine. Insurance, 1% of the total cost. But this will be the annual cost divided by 12 to convert it monthly. Right? To convert it monthly. This is your total fixed charges which are not dependent upon the running of machine. Right? And divided by the effective machine hours, that is 365. We will just check once. 97,366 divided by 365. Yes, it comes to 266.76. Right? It will come to 266.76. After that, variable cost, one is your repairs. Now, what is the repairs cost given? It is given that during the whole life of the machine, it is 18 lakhs. Right? If I want to calculate it per hour, how can I calculate? If in 1 year, the number of hours machine running is 4380, in 10 years, my machine will run for how many? 43,800 hours. And I want this cost to be per hour. So can I calculate 18 lakh divided by 43,800 hours? So that will give you 41.10. Right? 41.10. Or how can we calculate, sir? If 18 lakh is for 10 years, divided by 10, that will give you 1 year. Divided by 12, that will give you for 1 month. Divided by effective hours, that also you can do. How, sir? How, sir? How, sir? We didn't get it. See here. 18 lakh is the cost for the whole life of the machinery. What is the life of the machinery? The life of the machinery is 10 years. So divided by 10. What you will get? You will get the repairs cost for 1 year. But what we are looking at? We are looking at 1 month. So divided by 12 months, you will get the cost for 1 month. Then divided by 365 hours, that is effective machine hours, you will get 41.10. That is the cost per hour. So anyways, you can solve it. Both ways it is absolutely correct. The answer is same. Whether you do it by the number of years or whether you do it by the total running of the machine in those years. Both ways it is absolutely correct. Then it is electricity. It is directly given that 15 units at the rate of rupees 5 per unit. That is all hourly only. 75. This is your machine hour rate. Is this question clear? Go through this question and see if you have any doubts in this. Then we will move to the next one. Please go through with each and every calculation, and as I told you, you have to be very careful with the small points. You have to be very careful with the small points. That if the effective machine hours you are taking monthly, then all your cost should be monthly. If you are taking the same question, you can take it, the effective hours as annually, then convert all the cost annually. Even then you will get the same answer, sir. Even then you will get the same answer. You can try it on your own. Is this question clear? Yes. Okay, fine. Let's come to illustration number 7 now. Let's come to illustration number 7. Again, this question is on machine hour rate. Question number 7 is again on machine hour rate. Okay, let's read it. These are important questions. 6th one is important. The 7th one is very, very important. This can be asked in the examination. A machine shop cost center contains 3 machines of equal capacities, right? Shop cost center. Cost center means a department, right? A machine shop department, it is having 3 machines of equal capacities. To operate these 3 machines, 9 operators are required. That is 3 operators on each machine, right? 3 operators are controlling one machine. So 3 machines, 9 operators. Operators are paid rupees 20 per hour. The factory works for 48 hours in a week, which include 4 hours of setup time, right? Which includes 4 hours of the setup time. The work is jointly done by operators. The operators are paid fully for 48 hours. In addition, they are paid a bonus of 10% of the productive time. Bonus is given as 10% of the productive time. 14.095, I think something it is. So you can take 14.10, no issues. It's coming 14.095 something. So if you round off, it will come to 14.10. Costs are reported for this company on the basis of 13 4-weekly periods. Now what this line means, this line says there are 13 4-weekly periods. This 4 weekly period. This is 1 4-week period. 4-week period. That is 1 month basically we can say, right? So they are saying this is one period. Then you have second 4-week period, third 4-week period, fourth period. So on. You have 13 periods and each period consists of 4 weeks. Right? This is the meaning that there are 13 periods and each period is having 4 weeks. Clear? Done, sir. Okay. So coming to the next point, the company for the purpose of computing machine hour rate includes the direct wages of the operator and also recoups the factory overheads allocated to the machine. The following details of the factory overheads applicable to the cost center are available. What is given to you? Depreciation is given 10% per annum on the original cost of the machinery. The original cost of each machine is 52,000. Okay, sir. So the depreciation will be simple straight away. 5,200 will be the depreciation per annum. Right? After that, maintenance and repairs per week per machine is rupees 60. Per week per machine is rupees 60. Consumable stores per week per machine is rupees 75. Power consumption is 20 units per hour per machine at the rate of 80 paisa per unit. No power is used during the setup hours. Clearly mentioned. After that, apportionment to the cost center. Now these are the cost which are given. If you see, all these are cost which are given for per machine. For one machine, this cost is given to you. But if you look at the next cost, apportionment to the cost center, right? That means this is the cost given, cost for all 3 machines. This is the cost given for combined all the 3 machines. Rent per annum 5,400. Heat and light per annum 9,720, foreman salary per annum 12,960 and other miscellaneous expenditure per annum is 18,000. Right? Now this is not for one machine. This is for the whole cost center. This is for the whole department and in the department there are 3 machines. Calculate the cost of running one machine for a 4-week period. That means you have to do the calculation for this particular period, not for all the 13 periods. You have to just do it for one period. That means effective machine hours also you will calculate for this period. All the overheads also you will calculate for this 4-week period. 4 weeks you have to take. Right? Let's see what all cost is given to you. What all cost is given to you. Let's first talk about this cost which is given for all the machines. Right? Rent is there. 5,400 of rent is given. So what will you do with the rent, sir? Rent of 5,400 per annum is given to you. Firstly, effective machine hours. Forget about that. First you have to do is effective machine hours. Effective machine hours. How will you calculate the effective machine hours in this particular case? Effective machine hours. Can you calculate the effective machine hours? Yes, sir. Very simple. Very simple. Effective machine hour says the factory works for, read this particular part. The factory works for 48 hours in a week, which include 4 hours of setup time. So what will be your effective machine hours? What will be your effective machine hours? That is 48 minus 4. That is 44 hours. Isn't it? But this is for 1 week. What we need is we need to calculate it for 4 weeks. Right? We need to calculate for 4 weeks. So it will be 176 hours. Now here the period is defined that you have to take it for 4 weeks. Please do not calculate for the whole year here. If you are doing the calculations for the whole year, that means you are losing out on all the marks here. right? Because here they have defined the period, that for what period you have to calculate. So you have to calculate for those 4 weeks only. Please be very careful with these small things, guys. Please, please, please. Right? So 176 is your effective. Now, okay, let's come to the cost now. Rent 5400. So what will you do with the rent? 5400 is per annum. So what you need is, you need for 1 4-week period. How many 4-week periods are there? There are 13 4-week periods. So if I divide this cost, by 13, what will I get? I will get the cost for 1 4-week period. This 5400 is this total cost. If I divide it by this 13, I will get the cost for this 1 4-week period. Isn't it? So divided by 13. So what I will get? 5400 divided by 13, you will get it as 415.38. This is what you will get. Now, is this your answer for the rent? This is what the rent you will take? No, sir. The rent is given 5400 per annum for all the 3 machines. What they are asking for? They are asking for the machine hour rate to be calculated for just 1 machine. So you will divide this value further by 3 machines. Divided by 3, that will give you 138.46. And if you further divide it by 176, then you will get the overhead cost 0.79. Then you will get this overhead cost per machine hour. Is this clear? Is the rent part clear? First 5400 per annum. In the per annum, in the full year, there are 13 4-week periods. I want the cost for just 1 period. So I divide it by 13. 415.38. Now this is the cost for the whole department. In the whole department, there are 3 machines. I want to know it for 1 machine. So I divided it by 3 machines. Now I want the cost per effective machine hour. So I divided by effective machine hours also. Is this clear? So rent calculation, I have done it like this. Okay, rent 5400 they have taken. So what they have done is, instead of individual calculations, they have taken the total value. Rent, heat and light, foreman salary, total standing charges they have taken per annum. This they have divided by 13 4-week period and 3 machines. 13 4-week period to calculate for 1 4-week period, and divided by 3 machines to calculate for 1 machine. So this 1181.54 represents what? This represents the cost for 1 4-week period, and for 1 machine. Either you do it for the individuals or you take the total and do it on the total value. Both ways it is absolutely correct. That is totally your choice. How you are comfortable in the examination. There is no as such rules and regulations. There is no hard and fast rule. So as is comfortable you can do. Right? Now coming to the next part. Okay, this specific part we are done with. This part we are done. Next, salary to the operators. Now what is given? How will you calculate the operator wages, sir? For 1 machine, how many operators are working? 3 operators. And what they are being paid? They are being paid 20 rupees per hour. How many hours they are working? Sir, in 1 week, they are working for 48 hours. And what is the period that we want? We want it for 4 weeks. So how the operator wages will be calculated? Okay, I'll show here that how the operator wages will be calculated. For the operator wages, if you talk about a basic, we need it for 1 machine. 1 machine is being controlled by how many operators? It is being controlled by 3 operators. Each operator is being paid what? Each operator is being paid rupees 20 per hour. For how many hours they are working in 1 week? They are working for 48 hours. And we need the data for 4 weeks. So 3 into 20 into 48 into 4. You will get it as 11,520. This is the basic wages. Additionally, they are paid a bonus of 10%. 10% of what? 10% of the productive hours. 10% of the productive hours. That means the bonus is not to be calculated for the setup time. So how will you calculate bonus here? How will you calculate bonus here? That is 3 operators, right? Okay. I'll leave some space in the front. Okay. There are 3 operators. There are 3 operators getting 20 rupees for the productive time. So what is your productive time? Out of 48 hours, 4 hours is the setup time. So your productive is 44 hours per week into 4 weeks. Right? Now, is this the bonus? No, sir. The bonus is 10% of this amount. The bonus is 10% of this amount. Right? So this comes to 1056. So this is another important point here, the operator wages point, right? This is important calculation. So this is what they have done here. Operator wages, bonus is there. They are paying a bonus here, 48 hours, 4 weeks, 20 into 3 operators, and here 10% of the productive time. Simple. So this will give you total standing charges, machine expenses, depreciation is there. 10% of 52,000, 5,200 will be the depreciation, but that will be for the whole year. So divided by 13 4-week periods to get it for 1 4-week period, 400. Repairs and maintenance is directly given, rupees 60 per machine per week. 60 per machine per week. So we wanted per machine is fine. Per week we need it for 4 weeks. So we'll calculate for 4 weeks. Consumable stores is rupees 75 into 4 weeks because it is given 75 per machine per week. Per machine is fine. We need it per machine anyhow. So per week multiplied with 4 weeks. Power cost is also calculated 176 hours because no power consumption during the setup time, 20 units into 0.8. Total machine expenses calculated. So total expenses will be this standing charges plus the machine expenses divided by effective machine hours. You get 99.51. Now with regard to the presentation, I would say there is no hard and fast rule. What you can do is you can calculate the machine hours. You can here itself you can divide this standing charges by 176. You will get a value, right? This variable you can divide it by 176. You will get a value, and then the total machine hour rate. Or for each individual item you can directly calculate. For each individual item you can calculate the hourly cost. Here hourly cost. Here you will calculate hourly cost. Here again you will calculate hourly cost. Again here you will calculate hourly cost. So no issues with regard to that. Right? Either you calculate the total cost then divide it by the effective machine hours, or you calculate the hourly cost for each and every cost. Both ways correct. No hard and fast rule with regard to this kind of a presentation. Is that clear, everyone? Any doubts in this particular point? If you have, please let me know. Please let me know if you have any doubts in this. Okay, let's come to illustration number 8. So after this illustration number 8, we'll take the break, right? So let's come to illustration number 8. This is on under and over absorption. The total overhead expenses of the factory is 4,46,380. right? Total expenses are 4,46,380. Okay, before that, there is one point that has come to the mind. When it comes to the over and under absorption, right? Before that question, I'll just give you that idea. When we are talking about over and under absorption, when you are taking the actual overheads, you have to keep two things in mind. The first thing is the overheads should be of the current period. Overheads should be of the current period. Second thing, overheads should be related to routine operations of business. It should be related to routine operations of business. Right? So if there is any previous year overhead they are mentioning, we will exclude it. If there is any overhead which is not directly related to the routine operation, what do you mean by routine operation? Routine operation is by selling the product which you are manufacturing. For that manufacturing or selling of the product, whatever the overheads are incurred, we have to take that. So if there is any penalty or something, that we will not consider here. Right? Now let's come to the question. The total overhead expenses of the factory is 4,46,380. This is your actual overheads incurred. This is your actual overheads. Taking into account the normal working of the factory, the overhead was recovered in the production at 1.25 per hour. So this is your absorption rate which is given to you. The actual hours worked were 2,93,104. This is the actual hours worked in the current period. State how would you proceed to close the books of accounts, assuming that besides 7,800 units produced, of which 7,000 were sold, there were 200 equivalent units in WIP. The first and the foremost thing is we need to find out what is the under and over absorbed overheads. What are the under and over absorbed overheads? So here the actual overheads are given to you, that is 4,46,380. What is your absorbed overheads? Absorbed overheads is in the current period, what is the actual hours multiplied by absorption rate? So if you talk about the absorbed overheads, it will be 1.25 is the absorption rate multiplied by what? You say for every hour that we are working, 1.25 is the overheads that we will be recovering from the customer. So if we are working for actually 2,93,104 hours, so what is the cost that you are going to recover? That is 1.25 multiplied by 2,93,104. That will come to 3,66,380. This is your absorbed overheads. What is your actual overheads? Actual overhead is 4,46,380. You are absorbing 3,66,380. That means there is an under absorption. There is what? There is under absorption of 80,000. Right? So the first and the foremost thing is that whether there is under absorption or over absorption. So that we have calculated that there is an under absorption. The next we have to find out the reason now. For the treatment, for the costing treatment, accounting treatment, we need to find out the reason. What is given? On investigation, it was found that 50% of the unabsorbed overhead was on account of increase in the cost of indirect material and indirect labor. That is 50% is due to the genuine reason. So if it is due to the genuine reason, what do you do? We calculate supplementary rate. And the remaining 50% was due to factory inefficiency. So factory inefficiency means this is your abnormal reason. This is your abnormal reason. So abnormal reason means out of this 80,000, okay, I'll take here 80,000, 50% means 40,000 will be taken to where? Costing P&L account. Will be taken to costing profit and loss account. Because it is due to the inefficiencies. It is due to your problem. The remaining 50%, that is 40,000, is for this we will calculate supplementary rate. Clear? This is what they have done. Actual factory overheads under absorbed. 50% on account of increase in the cost, 50% due to factory inefficiency. So supplementary rate they have calculated. How will you calculate supplementary rate? Now be very careful. When you are calculating the supplementary rate, do not take 80,000. Supplementary rate will be calculated only for the 40,000. So 40,000 divided by WIP units of 200. Closing FG. Closing FG will be what? See here, 7,800 units produced, out of which 7,000 sold. So your closing FG will be 800 units and sale will be 7,000. Right? So 5 per unit. So then stock of finished goods, how much you will take? That is 800 units in the FG multiplied by 5, WIP 200 into 5, and cost of sales 7,000 into 5, total 40,000. What about the remaining 40,000, sir? That will be taken to costing P&L. The balance amount of unabsorbed overheads of 40,000 due to the factory inefficiency should be debited to costing profit and loss account, as this is an abnormal loss. Right? So abnormal loss will always and always be taken to costing P&L. This you should always remember. Okay. Any doubts in this part? Over and under absorption is clear. Okay, any other illustration which you want me to do? Or else I'll jump to the practical problems, and in that I'll take from practical problem number 4. I'll take practical problem 4, practical problem 5 I will take up. Then after that we can take up practical problem 10 we will take up. Right, so these 3 practical problems will take up, then 12 also we can take, we'll see according to the time. Right, 4 I will take up, 4, 5, then 6 is there, 6 is easy, yeah, 6 is easy, 7th, 8th, okay, we'll pick up in between, right? The 10th one also I want to take up. Their supplementary rate calculation is there. In case you people feel that any question which is difficult for you, we can take up that question. Right? Okay, let's take a 20 minutes break now. Right? So we'll resume after 20 minutes. It's almost 7:30, 7:50 we will resume and do the remaining questions. Right? We'll start with problem number 4. Practical problem 4, which is a very, very important problem which has already been asked in the examination multiple times. Okay? So let's go in for a 20 minutes break. You people have your dinner. Then after that, we will continue. Okay. Okay, so we are back. Just let me know quickly if you guys are back so that we can start. Yes, quickly let me know if you people are back. Yes, okay. Cool. So I think we can start now. Okay, I'll start with some practical problems. 2-3 practical problems we'll do and wind up this overheads part. Okay, let's come to practical problem number 4. Let's come to practical problem number 4, which is a very, very, very important problem. Let's see. Mark it as very important because this question they have asked in the exam also, just with the change of values or little bit twist the institute can do, but more or less the same question they have asked. Gemini Enterprises undertakes 3 different jobs, A, B and C. All of them require the use of a special machine and also the use of a computer. Right? So one is a machine that is being used, another one is the computer that is being used. The computer is hired and the hire charges work out to rupees 4,20,000 per annum. Right? So computer is not an owned one, it is a hired computer and we are paying the hire charges of 4,20,000 per annum. The expenses regarding the machine are estimated as follows. So this is regarding the machine, not the computer. So there are 2 different things. One is machine, another thing is computer. Right? For computer, it's very simple. You have the hire charges. And for machine, some of the charges are given now. Rent for a quarter, it is given 17,500. Depreciation per annum is given, that is 2 lakh. Now be very careful here. This expense is given per quarter. This is given per annum. In direct charges per annum, 1,50,000. Again, the charges are given per annum. Okay. During the first month of operation of the following details were taken from the job register. So there are 3 jobs being done, A, B and C. What is given is the number of hours the machine was used. Machine hours are given to you. Without the use of computer, how many hours were there? 600 and 900. That is a total of 1,500 hours without computer. And with the use of computer, 400, 600 and 1000. That is total 2000 hours with the use of computer. That means the total machine hours are 3,500. This is the total running hours of the machine. Correct. Now what they are asking for? They are asking for us to compute the machine hour rate for the firm as a whole for the month when the computer was used and when the computer was not used. Right? Ignoring the jobs. Here we are not doing job wise, just overall we want to calculate that when the computer was used, what is the machine hour rate? So what should be done here? What are the overheads when the computer was used divided by hours when the computer was used? Similarly, you have to calculate the overheads when the computer was not used and the hours when the computer was not used. Clear? Okay, so these are the overheads given to you. Now see the requirement. See the requirement very carefully. What they are asking for, they say calculate the compute the machine hour rate for the firm as a whole for the month. So that means the calculation is to be done for 1 month. That means all the overheads is to be converted to 1 month. Clear? So that is what they have done here. Total machine hour used 3500. Okay. What they have done here is total machine hours 3500. Fine. Machine hours without the use of computer 1500. Calculated. With the use of computer 2000. Calculated. Now total overheads for the machine per month, right? Why we are calculating it for the month? It is clearly mentioned in the question that machine hour rate is to be calculated for the month. So I always say that read the question very carefully. Read the requirement of the question very carefully, because that is where we can avoid maximum mistakes. Okay, so rent is given quarterly, so we divide it by 3 for 1 quarter. Depreciation monthly. Indirect charges again we have calculated monthly. So a total overheads are 35,000. Now this 35,000 of the overheads are for how many hours? This is for 3,500 hours. This is for 3,500 hours. Now out of this we have to see how many overheads are without computer, without the use of computer, and how many are with the use of computer. Clear? And when you are using the computer, here you have overheads. Out of this overheads, whatever you will get, plus you will have another overheads, that is your computer hire charges. Your computer hire charges will also be there. Is that clear, everyone? So what they have done is computer hire charges for a month 35,000, because for the whole year it is given. It is given here 4,20,000 per annum it is given. So we will calculate it for the 1 month. So for a month we have calculated. Now as I told you, this 35,000 of the overheads is for the whole of 3,500 hours, right? Can we calculate it for the number of hours without computer? Yes, without computer hours are 1,500. So what we are saying is, if for 3,500 hours, my overheads are 35,000. So for 1,500 hours, that is without computer, what will be the overheads? Divided by 3,500 multiplied by 1,500. This is without the use of computer. So that is what they have calculated here, 15,000. Now, what is with the use of computer? With the use of computer will be 35,000 by 3,500 into 2,000 hours. Because with the use of computer it is 2,000 hours plus this 35,000. This 35,000 is what? This is your hire charges. This 35,000 is your hire charges. So this is your overheads with the use of computer. Clearer? And 15,000 is your overheads. 15,000 is your overheads without the use of computer. So if you have to calculate the machine hour rate, what will you do? Sir, we will divide it by how many hours? 1,500 hours. Yes, sir. And this will be divided by how many hours? This will be divided by 2,000 hours, isn't it? So this will come to rupees 10 per hour, and 55,000 divided by 2,000, this will come to 27.5 per hour. This will come to 27.5 per hour. This is what they were asking for. The machine hour rate. See, with the use of computer, 27.5 per hour, and here 10 rupees per hour. So basically they were asking for machine hour rate without computer, machine hour rate with computer. So we calculated the overheads without computer divided by machine hours without computer. Then we calculated the overheads with computer divided by the hours with computer. Right? In the overheads with the computer, please do not forget to take the higher charges. Is this much part clear? Is the first part clear? Then we will move on to the second part. Then we will move to the second part of the question, where they are saying the machine hour rate is to be calculated job wise now. For individual jobs A, B and C, you have to calculate. First, let me know if the first part is clear. Yes, please let me know if the first part is clear, then I'll move to the second part. Clear? Good. Okay, let's come to the second part now, where they are asking for the machine hour rate job wise, right? So how will you do, sir? How will you do? That means we will calculate the machine hours for job A. If there is a job A, we will calculate what are the total overheads incurred on job A divided by the total machine hours on job A. This is what you will do. Clear? So for job A, the machine hours you are having, sir. For job A, this will be the machine hours, total 1000. For job A, 600 without computer and 400 with computer. What are the overheads now? Overheads can be calculated. This rate we have calculated. Rate we have calculated 10 and 27.5. So based on that, we can calculate the total overheads. We have calculated that for every one machine hour, there is a cost of 10 rupees. For every one machine hour, there is a cost of 27.5 rupees. So if I multiply it with the number of hours spent with computer and without computer, I'll get the total overheads. Total hours is 10,000, so I'll get the machine hour rate. Right? Similarly, if you talk about the job B, the total hours here is 1500 hours. What is the cost incurred here? What is the cost incurred here? 10 into 900 hours, 27.5 into 600 hours. So total cost divided by total hours, you will get 17. For job C, it is only with the use of computer. So it will be 1000 into with the use of computer, whatever is the rate, that is 27.5. So this we can show it job wise. First part, they were asking for the whole firm. Second part, they were asking for the individual jobs. So whatever is the overheads incurred on individual job divided by machine hours on the individual job. Yes. Any doubts in this, guys? All clear in this question? Now this is a very important question, I'm telling you. This is a very, very, very important question. We can't miss out on these kind of questions which are important, right? And it is not like that the institute cannot repeat the questions. The institute can definitely repeat the questions. Sometimes in, after every 2 to 3 attempts, they can repeat it. No doubts. All clear? Okay. So let's move on to the next question. That is question number 5. Again, very, very important question. Question number 5 is again very important. I'll come to this. A machine shop has 8 identical drilling machines manned by 6 operators. A machine cannot be worked without an operator wholly engaged on it. So that means out of 8 machines at any point of time, only 6 machines are working, right? Because there are 6 operators and they are saying that machine cannot work without an operator. So at any point of time, at some time machine 1 and 2 will be at rest, at other point machine 3 and 4 will be at rest, but 6 machines will be working. Okay. The original cost of all these machines works out to rupees 8 lakhs, right? So this is the total cost of all the machines, 8 lakhs. these particulars are furnished for a 6-month period. So there is some information which is given for 6 months, half yearly, not quarterly, not for the full year, but a 6 months period. What is given is normal available hours per month is 208. Okay, normal available hours per month. For every month, one worker can work for 208 hours. Absenteeism without pay is 18. And leave with pay is 20. Now my question is this absenteeism hours and the leave hours which are given, is it monthly, is it quarterly, or is it for 6 months? What it is, let me know. This absenteeism, the normal available hours are clearly mentioned, it is per month. But what about the absenteeism hours and the leave hours? Yes. Is it monthly or is it for 6 months? I want to know this. Huh? Is it monthly or for 6 months? What do you think? It is for 6 months. Correct. It is for 6 months, because had it been monthly, then it would have been clearly mentioned. So this absenteeism is and leave is for 6 months. Obviously, in 1 month itself, you cannot give 18 and 20 hours of the leave. Logically also, if you think you can, will you give so much of the leave to your worker? Absolutely no, we can't give so much of a leave to our worker, isn't it? Okay, next we have is normal idle time, unavoidable hours, that is 10 hours. So it is the normal time which is given to you. Average rate of wages per worker for 8 hours a day is rupees 800. That means rupees 100 per hour. For 8 hours we are paying 800. So that means rupees 100 per hour. Yes. Production bonus estimated 15% on the wages. Value of the power consumed is rupees 80,500. Supervision and indirect labor 33,000. Lighting and electricity 12,000. So all these expenses are given for how much period? All these expenses are given for a 6-month period, right? All these are given for a 6-month period. Then further they are saying that there are some particulars which are given for a year. Some of the information is given for 6 months and another information is given for 1 year. What is that information given? The repairs and maintenance, including the consumables, is 3% of the value of machine. Value of machines is how much? 8 lakhs. Okay, insurance is 40,000. Depreciation is 10% of the original cost. Other sundry works expenses is 12,000. General management expenses allocated 54,530. You are required to compute a comprehensive machine hour rate for the machine shop. Machine shop means for the total of 8 machines you have to calculate the machine hour rate, and here it is not to be done for just one machine. So please read the question very carefully. I am again and again I am repeating this. Read the question very carefully. Clear with this? Now in this question, the most important part is the calculation of effective machine hours that I will do. The cost part you can take, but the important part here is question number 5. In this, the calculation of effective machine hours is the trick. Effective machine hours. Effective machine hours. Okay, let's start with this. If for the effective machine hours, the first thing that we will take is the normal available hours. Now, what is given to you regarding this? What we'll take is normal normal available hours. How do you take the normal available hours? Now see, it is given for every 1 month, it is 208. Now see, let's talk about machine hours. What is given in the question? They say that the machine cannot work without an operator. That means if we are able to calculate the working hours of the operator, that will be the working hours of the machine, isn't it? Because it is clearly mentioned that the the machine cannot work without a worker. So that means it is going to be the same. So if the worker, they say, is working for 208 hours per month, if I multiply it with 6 months, so I am taking a 6 months effective hours now. If I multiply it with 6 months, will it give me the total hours? No, because this 200 will be for one worker. Logically also, if you think 1 month, that means if he is working for 8 hours or 6 hours, that means 240 hours around is for one worker. So how many operators are there? I'll multiply it with 6 operators also. So it will be 208 multiplied by 6 multiplied by 6, that comes to 7,488 hours. Clear? Now from this, what I should remove? If I remove the absenteeism hours, for these 18 hours, we are not going to pay this worker, right? We are not going to pay this worker. So I will, from this normal available hours, I will remove the absenteeism hours. Absenteeism hours, that is 18 hours multiplied by 6 operators, right? So 18 multiplied by 6, that is 108. So 7488 minus 108 will give me 7380. This 7380 represents what? This 7380 represents the hours for which we are going to pay to the 6 operators, right? So I can write here, this represents what? Paid hours for 6 operators, right? This represents what? This represents the paid hours for 6 operators. But is it the effective machine hours? No, sir. From this, we have to remove this leave hours also with pay, and we have to remove this normal idle time also. Okay, from this I will subtract leave hours, right? Leave hours is how many? 20 hours are there. 20 hours into 6 operators, that is 120, and minus normal idle time. Now for leave hours we are making the payment. Yes. For normal idle time also we are making the payment. Yes. Only for this absenteeism we will not pay to the employee. So normal idle time, how many hours are there? 10 hours. 10 hours into 6 operators, that means 60. So 180 from here, that means 7200. This is going to be your effective machine hours. Clear with this? Now you have to be very careful that effective machine hours you have calculated for 6 months, right? So all your expenses should be now for 6 months, right? Just take the expenses for 6 months, divide it by effective machine hours, you will get the machine hour rate. Is this clear, everyone? In this question, this was the important point, the calculation of effective machine hours, 7200 effective machine hours based on the labor hours, because they said that the machine cannot work without a worker. So if I calculate the hours of worker, effective labor hours, that will be your effective machine hours. Okay, I'm coming to that. Repair, insurance and other. Now, what we are saying is, listen to it very carefully. You are asking, Vedant, that this repairs and maintenance is calculated on the total cost of all the machines, right? Insurance also for all the machines, for 8 machines. Why we are not taking it for 6 machines? Good question. I was expecting this. Now, what is given in the machine shop? There are 8 machines, but out of that 8 machines, at any point of time, the working are 6 machines. So insurance cost will be there for all the machines or only for the machines which are working. Today, machine 1 and 2 is working. Tomorrow, the work is like that 1 and 2 will be on the rest, 3 and 4 will be working. Right? So the insurance cost or the repairs cost, it will be incurred only on those machines which are running, or all the machines. Insurance you will pay. Will you tell the insurance company, 2 machines are not working, why are you charging the insurance cost? Why are you charging the premium? Yes. What do you think? Got it? So that is why these costs are to be calculated for all the machines, not only for 6 machines, because there is certain cost which will be incurred on all the machines. The working might be 6 machines at any point of time. Clear? Any other doubt in this question? Yes. Any other doubt, guys, in this question? Yes. Anyone else having any doubt? Now, the rest, question number 6 is easy, that you would have done. Question number 7 is easy on under and over absorption. Question number 8 is easy, but these are important questions. Question number 7 and question number 8. These are good questions and these are important questions, right? Question number 9 also you can do. Okay, coming to question number 10 for once. Question number 10 quickly I want to discuss. Question number 10 we will quickly discuss. A light engineering factory fabricates machine parts for the customers. The factory commenced fabrication of 12 number machine part as per the customer specifications. Mark it as important. The expenditure incurred on the job for the week ending 21st of August is as tabulated below. Direct material, all items 780. Direct labor, manual 20 hours at the rate of rupees 15 per hour, that is 300. Machine facilities are given. Machine number 1 4 hours at the rate of rupees 45 and machine number 2 6 hours at the rate of rupees 65. So this is given total. Overheads beside the machine cost, this is also your overheads only. Right, besides this the other overheads are rupees 8 per hour on 20 manual labor hours. Total cost, right, for a particular job it is given. The overhead rate of rupees 8 per hour is based on this 8 rupees is what? Now this is your absorption rate. This is your absorption rate. They say how you have calculated this absorption rate. That's the case. How you have calculated this absorption rate. They say this absorption rate is based on 3000 man hours per week, right? Similarly, the machine hour rates are based on the normal working of machine 1 and 2 for 40 hours out of 45 hours per week. This rate, this is also your absorption rate. How this absorption rate is calculated? Dependent upon the machine hours. How this 8 rupees is calculated? This is dependent upon your labor hours. Clear? Next. After the close of each week, the factory levies a supplementary rate for the recovery of full overhead expenses on the basis of actual hours worked during the week. Right? Based on the estimates we have already done. Then at the end of the week, they see what is the variance here based on the actual number of hours. If there is a difference between the absorption rate based on the actual number of hours, then they use the supplementary rate. The difference they charge. During the week ending 21st of August, the total labor hours worked were 2400. This is your actual hours, actual labor hours. And the machine number 1 and 2 had worked for 30 hours and 32.5 hours respectively. Prepare a cost sheet for the job for the fabrication of 12 number machine part, duly levying the supplementary rate. Duly levying the supplementary rate. Now, the first half of the cost sheet is very simple. If you see the first half of the cost sheet, that is extremely okay. The only explanation is, see, direct material given in the question itself. No issues in that. Right? Direct material is directly given in the question. Direct labor again given in the question itself. No issues in that. Machine facilities given in the question. This part is also given in the question. This overheads also given in the question. No issues in that also. Right? Total cost. Up till this part there is no issue. Now coming to the supplementary rate. Supplementary rate. Listen to it very carefully. First I'll talk about the overhead part. Right? Now how this 8 rupees, the overhead absorption rate is given as 8 rupees. Right? How you would have calculated this 8 rupees of absorption rate? Listen to it very carefully what I'm saying. I'm saying how you would have calculated this 8 rupees of the absorption rate. Sir, you would have written budgeted overheads divided by budgeted labor hours. Budgeted labor hours is equal to 8. This is how you would have calculated it. Yes, sir, absorption rate we are calculating on the budgeted. Now they say the supplementary rate. For supplementary rate, what you have to do? Supplementary rate says that you have to calculate what? You should be doing budgeted overheads based on actual hours. Actual hours. This rate you should calculate. If there is a difference between this 8 and this rate, that is your supplementary rate that you have to do. Is that clear? Yes, sir. Now, what is given in the question? The question says this 8 were calculated on the budgeted 3000 man hours. That means, do you have budgeted overheads given here? No. You have the man hours given here. What will we do here is, we'll say budgeted overheads divided by budgeted labor hours is 3000 is equal to 8. Right? So from here, I will get my budgeted overheads. I'll get my budgeted overheads, that is 3000 multiplied by 8, that is 24,000. Now, if you have the budgeted overheads, do you have the actual labor hours? Yes, sir. We have the actual labor hours, which is 2400. So can we calculate now? For this part, can we calculate that 24,000 divided by 2400? That means based on the actual hours, your absorption rate should have been 10. Based on the actual hours, your absorption rate should have been 10. But what is your absorption rate actually? 8. So that means the difference between two, rupees 2, will be your supplementary rate. See here, for overheads for 20 hours at the rate of rupees 2 per hour. This is what I have calculated. This rupees 2 supplementary rate, that is the difference between rupees 10 and rupees 8. First, this much part, tell me if you are clear with. If any doubts up till this part. Yes. I want to know if you have any doubts up till this particular part. Yes guys, please let me know if you have any doubts on this part so that we can proceed. Okay. I'll continue then. Now we are talking about machine 1. Please guys, if you want the live sessions, then please make it bit interactive. If I'm asking something, you should respond. Otherwise, it is as good as a recording only. Right? Otherwise, it is as good as a recording only. So for machine R, again, for machine 1, what is given? The absorption rate for machine 1 is given as what? It is given as 45 rupees. It is given as rupees 45. Right. So how this absorption rate you would have calculated? You would have calculated this absorption rate as budgeted overheads. Budgeted overheads divided by budgeted machine hours. Budgeted machine hours is equal to 45. Now for supplementary rate, what we have to do? For supplementary rate, we say the rate should be calculated based on actual hours. So budgeted overheads divided by actual machine hours. Right? This is the rate that you have to calculate for the supplementary rate. Right? Now we do not have the budgeted overheads here. We do not have the budgeted overheads, without which we cannot calculate the rate. So we will calculate the budgeted overheads, budgeted machine hours. Now what is the budgeted machine hours? See here, it is given the machine hours rates are based on the normal working of the machines, 40 hours out of 45 hours per week. Now be very careful here that it is not 40 hours for machine 1 and 45 for machine 2. No. For both the machines, it is 40 hours working out of 45 hours available. Out of the total 45 hours which are available, the machines work for only 40 hours. Right? This is what it means. So from here we can calculate the budgeted overheads now. So from here the budgeted overheads will be what? It is 45 into 40. That is 1800. Right? So here now we can calculate budgeted overheads 1800 divided by actual machine hours are given. Actual machine hour for machine number 1 is 30 hours. So I'll take divided by 30. So I'll take here 30. It comes to rupees 60. So what is the difference here? 60 and 45. The absorption rate calculated on budgeted hours is 45. On actual hours it is rupees 60. Right? So supplementary rate will be. So your supplementary rate will be the difference, that is rupees 15. Similarly, you can calculate for machine 2. right? For machine 2, you can do it on your own. I have done it for machine 1, I have done it for overheads. So that was the important point in this particular question. That is question number 10. Right? So this was the important point in this question. Let's move on to the next one. 12 you can do. 11 you can do. I'll do the 12th one, the last one, right? So after the 12th, we'll wind up. So this 12th one is the last one. It's a bit lengthy, but then fine, right? This 12th one I'll take up now. Okay. A Limited manufactures two products A and B. The manufacturing division consists of two production departments P1 and P2 and two service departments S1 and S2. Budgeted overhead rates are used in the production departments to absorb factory overheads to the products. Right? Okay, the rate of department P1 is based on the direct machine hours. That is, the department P1 is what? It is a machine intensive department, whereas department P2 is based on the direct labor hours. That means absorption, how the absorption is being done. In the department P1, absorption is done on machine hours. In the department P2, absorption is done on the labor hours. Clear? This is what is given. In applying overheads, the predetermined rates are multiplied by the actual hours. That we know how we calculate the absorbed overheads. For allocating the service department cost to the production departments, the basis adopted is as follows. For the secondary distribution. Now this part is for what? This part they are mentioning it for secondary distribution. That how the secondary distribution is being done. Cost of department S1 to P1 and P2 equally, and cost of department S2 to P1, P2 in the ratio of 2:1 respectively. So which method they are applying? They are applying direct distribution method. Right? They are applying which method? They are applying direct distribution method. The following budgeted and actual data are available. The annual profit plan data. The factory overheads budgeted for the year is given to you. Right? So the first step will be to distribute this between P1 and P2 and this also between P1 and P2. Budgeted output in the units is given, that is product A 50,000 and product B 30,000. Budgeted raw material cost per unit is given, product A, product B. Budgeted time required for production per unit, department P1 which is machine hours, on product A 1.5 machine hours per unit. Right? In product B, 1 machine hour. Similarly, in the P2, there are labor hours. So for product A, 2 direct labor hours, and for product B, 2.5 direct labor hours. The average wage rates budgeted in the department P2 are product A rupees 72 per hour and product B is rupees 75 per hour. Right? These are all budgeted data which is given to you for the year. All material are used in P1 only. Then what is given? See here, the actual data for the month of July 2022. So for a particular month, they are giving you the actual data. Right? The actual data they are giving is for a particular month of July 2022. The units actually produced is product A 4,000 units and product B 3,000 units. After that, actual direct machine hours worked in department P1 on product A 6,100 hours, product B 4,150 hours. The actual direct labor hours worked in department P2 on product A 8,200 hours and product B 7,400 hours. This is what is given to you, actual data. Now this whole actual data is just for 1 month. The budgeted data is given for the whole year, whereas actual data they are giving it for just 1 month. Okay. Cost actually incurred, product A, product B, raw material cost, wages cost is given. Now the overheads are given for department P1, for P2, for S1 and for S2. Clear? You are required to compute the predetermined overhead rate for each production department. That means you have to calculate what? You have to calculate absorption rate. You have to calculate absorption rate for the production department P1 and P2. But for that, what you have to do is the first step will be the secondary distribution. Okay. So budgeted overheads for the year are given to you. This is given, right? This is given, and this is nothing but the cost as per primary distribution. The first step that we have done, this is given as per primary distribution. Clear? Now, how to do the secondary distribution, that is also mentioned. S1 is to be distributed equally. So this S1 has been distributed equally, right? S2 is to be distributed in the ratio of 2:1. So it will be 3 lakh and 1,50,000. This is the total cost of production departments, right? This is the total cost given for production departments. Now, if you see the production department P1 is machine intensive. Yes, sir. Can you tell me the machine hours? Can you tell me the machine hours? And the department P2 is labor intensive. So how can we calculate the machine hours? Machine hours, see here, in the department P1, product A, 1.5 machine hours for 1 unit. And what is the budgeted unit? That is 50,000. So can I multiply it with 50,000? This will give me 75,000 machine hours. And this I can multiply it with the budgeted output, because for 1 unit it is given. So for the output we can calculate that here it will be 30,000. So total of 1,05,000 machine hours. Similarly, for labor hours also we can do, that is 2 into 50,000. That is 1 lakh. 2.5 into 30,000. That comes to 75,000. So total of 1,75,000 labor hours in the department P1 and P2. That is, this is the base for the absorption of overheads. 1,05,000, 1,75,000. So overheads after the secondary distribution divided by the base, what you will get is, you will get your budgeted machine hour or the labor hour. For P1 it will be machine hour, for P2 it will be labor hours, 30 and 15. Is this much clear? The absorption rate that they are asking for is clear. Please let me know. Okay, fine. Now let's come to the second part of the question. Second part says, prepare a performance report for July 2022 that will reflect the budgeted cost and the actual cost. So you have to prepare a report where you have to show what is the budgeted cost and what is the actual cost, right? Where we have to show the budgeted cost and actual cost for each element, like raw material, labor, overheads in the department P1 and overheads in P2. Fine. So if you talk about raw material, how can we calculate the budgeted? The budgeted raw material cost per unit is given 120. Isn't it? It is given 120 and here it is given 150. Can we calculate the budgeted as 50,000 into 120 and 30,000 into 150? No. Here the budgeted, if you have to compare, performance report means you want to compare your budgets with the actuals, right? Now the actuals which are given, actuals are given for how many units? The actuals are given for just 1 month, that is 4,000 units and 3,000 units. So what will you do? You will calculate the budget for these units budgets versus the actuals for 4,000 units and 3,000 units. Clear? So that is what they have done here. If you look at 4,000 into 120, this is what? This is the budgeted. 3,000 into 150 budgeted. Sir, what about actual? Actuals are already given to you. 489 and 456. 489 and 456. No issues in that. Right? 459 and 486. This is already given. This is as such given. Just the budgeted part. For the budgeted part, what they have given is that per unit budgeted raw material is 120, 150. So whatever is the actual production, 4,000 and 3,000, we multiplied with the budgeted cost per unit. Right? Similarly, we can do it for the labor cost. Right? So labor cost is given, the average wage rates. Budgeted labor, now the labor cost is in which department? In the department P2 only. The budgeted hours are given 72 and 75. Right? And for 1 unit, how many hours are required? That is also given 2 and 2.5. We are talking about the labor cost, sir. We are talking about the labor cost. So how they have calculated the budgeted? 4,000 units. For every 1 unit, 2 hours are required. So multiplied by 2, that will give you the total hours. Multiplied by 72, that will give you the budgeted cost. So 4,000 units into 2 hours, that will give you the total hours, into 72, that will give you the budgeted cost. Similarly for B. And these actuals are given in the question. These actuals are given in the question itself, 591,900 and 5,52,000. Clear? This is actually given in the question itself. Done. Now coming to the overheads part. Now, the overheads are divided into 2 parts. One is based on machine hours for your department P1. Another one is based on the labor hours for your department P2. Right? Can you calculate this machine hours? Yes, sir. In the department P1, for every 1 unit, what is the machine hours which are required? For every 1 unit, what is the machine hours which are required? That is 1.5 and 1. This is the budgeted machine hours, right? For actual production, that is 4,000 and 3,000 units. Then what will be the machine hours? Can we calculate 4,000 into 1.5 and 3,000 into 1? Right? Multiplied by what? This will give you what? This will give you machine hours. To find out the cost, you will multiply it with what? You will multiply it with the machine hour rate. This is the machine hour rate that you have calculated, 30 rupees. So 30. This will give you the budgeted data. Sir, what about actual? Wait about the actual. I'll talk about the actual data. Similarly, for department P2, 4,000 unit into 2 hours, this will give you the labor hours. Multiplied by the absorption rate, this will be your budgeted cost. Clear? Now the big question is, what about the actual cost? What about the actual cost? How to deal with the actual cost now? See here, for actual cost, what is given to you? For actual cost, what is given to you? If you see here, the actual cost is given for P1. Why product B is 15? Where, Vedant? Product B is 15, where? Now, I'm not clear with your question, Vedant. Just clarify, till then I'll continue. Now, what about the actuals? Now, if you see the actuals, for the actuals, P1 is given. What is given? The cost for the P1 is given. Cost for P2 is given to you. isn't it? Cost for S1 is given, cost for S2 is given. So which overheads will you take? Actuals. Which overheads now will you take? So what we will have to do here is, we will have to do what we did in the first part. What we did in the first part, we have to do it for the actuals. That is, the first you will have to do the secondary distribution. Then you will have to calculate the absorption rate. Then you can calculate the actual overheads. Right? So what you will have to do is, you will have to first do the secondary distribution for actuals. See here. Okay, actual overheads. See, the actual overheads are there. Actual factory overheads for the month of July are given to you. S1 distributed equally, S2 distributed in the ratio of 2:1. So you will get the total overheads of production department. Right, now P1 is machine intensive. So actual machine hours are given to you. This is your total machine hours, that is 6100 plus 4150, that is 10,250. So if you divide this by 10,250, you get the actual machine labor hour. Basically, for the actuals, we have to do the same thing which we did it for the budgeted in the first part. Right? Department P2 is what? It is labor hours. So labor hours total is 8200 plus 7400, that is 15,600. So divided by 15,600, you will get it for 1 hour. So what is there in the department P1 for product A? For product A, the actual cost is what? For every one machine hour, 28.59. So in the department P1, what is the actual hours? 6100. So can I do 6100 multiplied by 28.59? This comes to 1,74,399. Is it the actual cost that they have taken? 1,74,400. They have rounded it off. That's totally fine. Right? They have done the rounding of thing. That's totally fine. Similarly, if you talk about in the department P1 for product B, it is 4150 hours. So you'll do 4150 into 28.59. So you will get the other value. Department P2, which is labor intensive, product A, how many labor hours are incurred? 8200. So 8200 multiplied by 16.02, product B 7400 multiplied by 16.02. These are the values that you will get for the actuals. So why we did this for the actuals? Because for the actuals, the cost of the production department as well as the service department were given, and service department cost we can never take. Right? So we have to first distribute the cost of service department amongst the production departments, as we did it in the first part. Calculated the absorption rate, then distributed it between product A and product B. Vedant, where is I'm not able to understand the question what you are asking. Why product B is 15? Where is product B 15? I want to know. I'm not able to understand which part you are asking. Yes, is this question clear? Now, sometimes the student asks the sir, this question can be asked in the examination. First and the foremost thing, ICI can ask anything. Secondly, if not the whole question, they can ask the part of the question there. Right? So it can always be asked. Anything can be asked. Vedant, do you want to ask if I'm not wrong, you're asking here why we are not taking rupees 15 here. That's what you want to ask. Okay, got it. I think that was the problem. Machine hours and labor hours, that means you thought for A 30 and for B 50 it should be 15. Right, that's what it is. I think I got your question right. Yes, everyone clear with this? So we are done with the chapter of overheads. Right, so we are done with this. The overheads is done. So now it is up to you people to revise the overheads thoroughly once. Right, go through with it. If you have any doubts, just let me know. Tomorrow is Sunday, so tomorrow there will be no session. The next session will be Monday evening. Right, tomorrow there will be no session. Monday evening we will start with activity based costing. We will finish. We'll try to do it in the first half itself and then do the cost sheet part. Right, we'll try to cover more than one chapter on Monday. Is that clear, everyone? Any doubts? Anything you want to ask? Done for today's session. Target completed. I wanted to complete overhead, so we are done with the overheads part. Any doubts if you have? That's fine. That's okay. Vedant, have you covered all the chapters or you're still doing? How many chapters you have covered from there till now? That I got it from the old playlist, from the 2023 playlist you would be doing that. Nothing. It's only the contract costing that you have to leave. Rest everything is same. From that playlist, the only thing that you have to leave is contract costing. That is not to be done. And additionally, you have to do the MCQs part, the case studies part. The case studies lectures, the module case studies lectures I have already uploaded on YouTube. So nothing else to be done. Right? 12th. Good. Fine. Nothing. You just have to leave contract costing. That's it. Okay. You have to do service costing, standard, marginal, budgetary. Right? It's okay. Just continue with what. That's it. Nothing else to be done. Okay. Anything else you people want to ask? Or else we'll close the session. Anything else you people want to ask? So please note, tomorrow, Sunday, that is 19th of July, there will be no session. 20th of July, then session will be there. For that, see, that will come with the practice. This thing you should not keep in mind that it's a lengthy question. It will be a difficult one. In the exam, if you will see the question paper, sometimes the question is over 3 pages. right? So do not be fearful about the length of the question. Just try to understand. If you are fearful about the length of the question, try to break down the question into various parts. Read the question, break down. Okay, this is one part that I have to focus. This is second part. This is third part. Break down the question into multiple parts and then try to solve it. It is not necessary that the lengthy questions will be difficult ones only, right? Just that you will overcome with the practice, one thing, right? And during the practice also, what you should try to do is you should try to break down the question into smaller parts according to the requirement of the question. I can't recommend as such direct text, any lectures or summary book. No idea as such. You'll have to search on YouTube, whichever faculty you feel comfortable with, you can go for. No as such recommendation I can give you for direct text. You have done it once, you want revision or what? For the direct text, you want revision thing or you have to do it for the very first time? Revision, for revision. Okay. No as such recommendation. You can once check the Arivu Pro channel. There Dilip sir is taking direct text. I don't know if he has uploaded any latest lectures or something, but he normally takes the revisions. Arivu Pro channel that you can check, because I personally know Dilip sir. He takes direct text revisions, right? But I'm not sure if he has taken it this time, or I'll just confirm with him, right? If there is any direct text marathon that he has taken, I'll let you know, right? I don't think he has taken this time. I'll check with one of the faculties. Your attempt is September, right? Okay, I'll check with Dilip sir. One faculty is there from the Arivu Pro. I'll check with him if he's taking any marathon in the coming days or if he has already done it. 12 days back he has done. Okay, no, that's a demo class. Okay, I'll let you know, Vedant. I'll let you know, right? Okay, so we are done with the today's session, right? See you guys on Monday evening now. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.